I'd like to start with the meat of our discussion, and I've asked Kyle to start out today talking a little bit about expectations for corn as it relates to tomorrow's USDA report and provide a perspective from FC Stone. Thanks, Kyle.
Absolutely. Thank you for having me. Thank you, Chris, and to the CME group for inviting me. To start out with, I'll touch a little bit on the old crop carryout. Trade expectations are for a slight increase of about 10 million bushels for the old crop carryout, mostly due to a little bit lower export and ethanol usage number. I think you could see that number change, anywhere from unchanged to about 20 million bushels lower. Probably not going to have a substantial impact on kind of the meat of the report, which is really the yield and production carryout estimates for next year. Looking at the trade expectations for yield, the market's expecting 170.7 bushels per acre on corn. That's up a little over 3 bushels per acre from 167.4 last time around. Pretty interesting. Chris kind of emailed me earlier in the week, asked me about FC Stone's estimates. We're coming in, and we came in at 174.1 in our most recent survey. It's important to note, though, that our survey is actually done through our customer base with a number of elevators across the Midwest, and we asked them not to estimate what they believe the USDA number will be, but actually what they believe the final yield number will be. So I think that 174 to 175 is probably more a proper reflection of where the market believes this crop will be at towards the end of the year, potentially even above that. Corn condition ratings released earlier this week are the highest since 1992. So you're really seeing some positive signs there in terms of what the yield expectation is. I think the surprise tomorrow from USDA might actually be a higher than trade expectation number. Prices have obviously been under an awful lot of pressure, but I think the stage is kind of set with those crop condition ratings for the USDA to really bump that number up pretty substantially. Obviously, the August report at 167.4 was pretty disappointing. It was well below the the average trade expectation. I don't foresee that happening again here, but I guess history would tell you otherwise, that the USDA has been very conservative in terms of upping that yield until we really get later in the year. They typically make the big adjustments in the October report and then moving forward into the January report. So if we realize that 170.7 bushel per acre yield, we'd be looking at a carryout of just slightly over 2 billion bushels for next year. That's up about 200 million bushels above last report. Again, just a simple production increase. Don't see many changes on the demand side in this report. Looking at the global carryout then, the market's expecting a slight increase from last time around, looking for an average trade estimate of 190.3 million metric tons carryout globally. Most of that increase obviously coming with the increase in supply here domestically in the U.S. Actually a slightly offset by a likely lower South American corn production number. Brazil in particular is a little bit below where the U.S. is, or the USDA has them pegged. I would not be surprised to see that move a little bit lower, but our global ending carryout is up 16.73 million metric tons versus 2013 and 1.45% above a year ago, which would be the highest number we've seen on a global ending carryout basis since the early 2000s. Obviously, that's pretty well been priced in ahead of this report. We've been making fresh lows over the last few days, so it'll be very interesting to see if the market can kind of push us to a new leg lower if we do see the big yield number from USDA tomorrow.
Thanks, Kyle. So in short, potentially larger number in corn tomorrow, and some interesting feedback from the FC Stone customers on that full year figure. Thank you. Bill, we'll have you talk a little bit about soybeans and wheat today. I know we've got you talking about both of those products. Over to you.
Okay. I guess the headline number is that the trade is expecting the soybean production estimate to be about 3,882,000,000 bushels. That's roughly 65 million bushels above the August estimate and 600 million bushels above last year's crop. With respect to ending stocks for the new crop, the average estimate is 452 million bushels. That's up 22 million bushels. So the trade, in essence, is thinking that the crop will be 65 million bushels larger, but that 40 million bushels of that will get used up and increase ending stocks by only 22 million bushels. With respect to the international number, the average trade estimate of ending stocks for next year are 87 million metric tons. That's up about 1.5 million metric tons from August. but it's up 20 million metric tons from ending stocks of the old crop year. I'm always kind of surprised that people fixate so much on getting the number right before the report. I've got history on what the average trade estimate was, the high and the low, going back some 30 years. And if you take a look at where prices are a week following the report and how they reacted to surprises in the report, whether the crop was substantially larger or smaller than expected, it turns out there's little or no relationship at all. What that suggests to me is that what the market trades the day of the report is not the report. It's trading something else. And I think some of the things that the market's probably trading with respect to soybeans is the next report. Even more so than in the case of corn, most people in the trade think that the USDA number is very, very soft, and they don't narrow in on a more precise number until the October crop report and the November crop report. So they're basically, I think, trading what they think the next crop report is going to be. And also, over the last 10 years or so, I think it's more important to the market what the South American crop is going to do. Today, the majority of the soybeans and soy meal that's exported in the world today comes from South America. The South American crop, particularly Brazil and Argentina, is significantly larger than even this record U.S. crop that's expected. And we're not going to start planting the Brazilian crop until next week. So the larger crop, the crop that's more important to the world market, it hasn't even been planted yet. So I think expectations with regard to the South American crop is having some influence on the marketplace, so that it's not all about the September crop report. It's about the October crop report and what's going on in South America. On the demand side, Chinese crushing margins, forward crushing margins, are down sharply from what they were a year ago. A year ago, they were about $2.25 a bushel. Today, they're only about 30 cents a bushel. So the incentive to purchase large quantities of soybeans is less, significantly less than what it was a year ago. And we're looking for China, which is the world's largest importer of soybeans, to increase their imports only 4 million metric tons, which would leave a substantial, large carryover going into next year. Lastly, I was asked to maybe make a few comments about wheat. Basically, the trade doesn't think anything's going to happen in wheat. If you take a look at the average trade expectation for wheat ending stocks, the trade thinks no change in U.S. ending stocks, no change in world stocks. The only reason to talk about wheat is the fact that we recently set a new life of contract low. And that's important because normally the low would have occurred sometime in late July, early August. There was some stability in the market. Certainly the cash markets have shown stability, but in the futures market, we're setting new contract lows. We think that the cash market has basically found a bottom, but more importantly, we think that the futures market for wheat is going down in Chicago, largely because of the influence and in sympathy with new contract lows in corn and soybeans.